I want to go over the second strategy for 2021 that we're releasing to the All Strategy Access clients and making available in the All Strategy Access portfolio and other portfolios. Tick Wave. This is a long and short strategy. It was just going to be short, just long, but it turns out that since the last 3.5 years, the short side works really well, and so that's what we want. And so here is the performance summary with longs and shorts. And you see how well it works since 3/8/2013. Actually, it does best since 2015. Doesn't do much since from this point to this point. It's kind of flat, but from 1/1/2015, you see how well this does, and really does really well in recent trading since the beginning of 2018. So long and short trades on the ES and the Nasdaq. I want to break this down and show you what it looks like long only, what it looks like short only, and from when. And so I really like the way this strategy treats long and short trades. Exact same rules flipped for long and short. So we're not trading a different pattern, we're just trading the opposite. And so I'm going to show you the long only first. So here are the results with long only, and you see how well it works since January of 2015. It works really well. Before that, it doesn't work so well. On the long side, going all the way back to 2000, we're going back to January 2007. This is with slippage and commission. So you have $90 average trade profit after $25 round turn slippage and commission. Periodical returns, you see the monthly results are doing well. This type of market, trading it a little bit differently with the NYSE tick, a little bit of a delay mechanism in, and let's look at the annual, really good results. So it's really in sync with this market, not a lot of trades, trading the long only. Now let's look at the short only side. So here's the short only side, not as many trades because the short setups are not there, but since July, let's go back to July the 1st, 2017, you see how well the short side has done. And so let's go back to July the 1st, 2017, and also January of 2015 to check out the results of the short and then the short end, the long and short side. So this is really unique because we don't typically see strategies where you flip the long side and you get the short signal and it looks anything like this. It usually looks pretty bad, and it's definitely not making recent equity peaks. So here is what this looks like since 2017. Only 100 trades, $229 average trade profit, 39.35 drawdown. So I really like the results of this, and it was developed by flipping the long signals to the short side. Let's look at both the long and short signals since July of 2017, and I'm going to update that right now. 57.475, 52.45, 10.95, and $200 average trade profit. So this is very robust. And you see the equity curve right here. Let's look at the periodical returns. And so 2018, 2020, we're in a new normal. I like strategies that work now and also work historically. And this is a fairly short record, but we're at much higher levels in the Nasdaq than we've ever been. And so you can't really trade it the same way as you did when Nasdaq was at 2,000 or 3,000 when you're at 12,000. So, you can't, when markets are higher priced, the prices rise. You don't just automatically scale volatility for price. And so I'm going to change the look back time now to January of 2015. So we have about 6 years. And I'm going to take a look at this going back 6 years. So here we go. So long and short side going back to January 2015, 73.235, $140 average trade profit, 52.50 drawdown. This is with slippage and commission. 54 on the long side, 19 on the short side. It's not as good. Short side is not as good before 2017, but the fact that it actually works well since 2017 is pretty impressive to me. To get anything to work on the short side the last few years is really good, and for that short signal to be the exact opposite of the long signal is telling to me. I like this pattern a lot, and it's new, and I'm putting it out there for the All Strategy Access, maybe included some of the other portfolios as well. It's basically the same concept on the ES. I'm going to take a quick look at the ES after we look at this back to 2007. So here's a report going back to 2007, 365 max drawdown, 64 average trade profit, and you see the equity curve definitely works better since 2015 here, and doesn't do terrible before that. Again, Nasdaq is in a different place than it was prior to 6 years ago, trades differently, and so this is the result back to 2007 with both longs and shorts, and you see that it does. You see that with just longs, it's worse in this time frame. So shorts worked better back here. So that's the tick wave. E-mini Nasdaq. I want to take a quick look at the E-mini S&P here now as well. Using the exact same code on the E-mini S&P, you have, and with slippage and commission, here is the equity curve. Longs and shorts back to 2015, 44, 137.50, 93 average trade profit with $25 slippage and commission, 75.75 max trade drawdown. And you see the difference between the longs and the shorts. Better on the long side, 43.50 drawdown on the long only. I want a strategy. If this market rolls over into bear market territory, we want to come up with a strategy, something that's actually worked on the short side the last few years, and is the opposite of the long signal, is in my opinion a great way to potentially trade any future bear markets. $800 stop loss, that's pretty tight, so that's something to consider as well, maybe increasing that stop loss if volatility picks up. But it's very basic strategy. Here it is, tick wave, E-mini S&P. We just looked at tick wave, E-mini Nasdaq. This is a new strategy for 2021.